Okay, today I'm gonna take a look at the cotton market. So usually I don't really talk about cotton because I really want to focus myself on natural gas, but I mean cotton is a really good one because it has a very clear pattern, and I love clear pattern, so I'm gonna talk about cotton. And as you can see, we have been in the correction channel since the beginning of August, and just a few weeks ago, namely at the end of November, we had a breakout and it tried to go back again, but it failed, so it pulled back and found support at the moving average, which I can show you is a very important one, a daily moving average, and then it pulled back. So at this time, I do think it probably will go to 65-ish because of this triangle, and if you take a look at the daily chart, and you can see that it has a trend line, and so 65-ish is a very important area, and so I do think that place is where it ends. And after that, it will just fall below this line. And I need further confirmation because, I mean, it can be possible that this sucker will break this upper line due to the fact that it's a triangle, and when it breaks, it can go to 68-ish. And to test the weekly moving average just over here, so at 68-ish, and it will go along with the Elliott wave pattern, which I can show you. It's A, B, C, and this is W, X, A, B, and I'm thinking about another C. So it probably can go to 68-ish if you do the measurement. But I don't really think it's very probable. Just another reason for that is because when it drops, it has big volume. So you can see here it has very big clear volume, and when it goes up, it simply didn't. So I don't really think this one will go higher. I think it probably will drop below this line, so I need a further confirmation when it drops to 63.20-ish, something like that, before I can take my short position. And another thing for that is right now we are in a very large downtrend, and this trend should be continuing because of the Elliott wave theory. This is 1, 2, this is 3, 4, and right now we need a fifth wave push, and this channel is very corrective, and it's not overly corrective, but it is corrective, and everything just goes along quite well. And so where the target is probably the low here, so I'm thinking about 56-ish. I think I will take my profit at 56 because I don't want to be greedy. And another reason for that is when it has some sort of correction and it always goes below the origin of the correction, always below and always go below. So right now I'm thinking about just to be a little bit careful, and I sort of set my close at profit at 56-ish, and it can be sort of certain that that I will get some profit here. Otherwise, if you are thinking about something else. Otherwise you can just take half of your profit somewhere here, and when it goes down, for example, to 40, 49, 50-ish, it's probable. I mean, because if you do some measurement, it is certainly probable 54, 53, anything like this. So, and that's it. I mean, it's a very high probability trade setup. If it happens, if it goes below 60, 63, 50, then you can take the short position. But before that, you just need to watch. I mean, it looks promising, but you always need to remember that when something is looking too good, it might be a trap, and it might not happen. So this is the reason why you need further confirmation, and just to be careful with what you are doing. Because we are not running a casino, we are running a business, right? And we need to make educated decisions. And when everything is broken, then you can make sort of educated decision. And that's it. It's for today's cotton analysis. And thanks for watching my first video. I hope this trade goes along well. Otherwise, it can be the first video that I fail. And I hope you enjoy it.